In yesterday's news video, I shared with you one big reason as to why the crypto market is not showing any positive movement right now. At the moment, there's only one thing that can help the crypto market overcome this big hurdle. But while everyone is fixed on the approval of Bitcoin spot ETFs, something big is getting completely ignored that you all need to know about. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when I drop latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Introducing Altcoin Buzz Alpha. Now, manage your crypto portfolio with regular updates and top insights for only $15 a month. Get hot Web3 trends, undervalued crypto gems, daily portfolio strategy, and responses to your crypto queries. For more information, check out the links down below. The potential of a spot Bitcoin ETF approval to drive prices up is dramatically underestimated by the crypto market, according to analysis from crypto research firm K33. In a September 5th market report, K33 senior analyst Vettel Lund and vice president Anders Helseth said the last 3 months had greatly improved the chances of a spot Bitcoin ETF approval, but the sentiment had not been reflected in the price of Bitcoin or other mainstay crypto assets. The analysis explained that while Bitcoin had all but given up its gains in the wake of Grayscale's legal victory over the Securities and Exchange Commission, an approval would attract enormous inflows and significantly increase buying pressure for Bitcoin. They wrote, however, the downside of a potential spot ETF rejection would be negligible and Bitcoin prices would simply maintain business as usual. They added that given the increased likelihood of a spot ETF approval, with several Bloomberg analysts now predicting a 75% chance of approval within the year, the market's outlook on ETFs is fundamentally incorrect, saying, "I firmly believe the market is wrong. This is, by all accounts, a buyer's market, and it's reckless not to aggressively accumulate Bitcoin at current levels." Now, while I don't fully agree with them that this is the end-all be-all level to accumulate Bitcoin, I do think we can actually go a lot lower, but it's always a good time to start DCAing. However, there is one very important ETF that's not a Bitcoin one, which could be approved in the next month. It'll be massive, but we'll get to that in just a minute. Coinbase's Ethereum Layer 2 network Base has suffered its first major outage since its public launch on August 9th. For about 45 minutes on September 5th, no new blocks were produced on the Base chain. Its developers first identified the stall block production at 9:36 p.m. UTC, according to the Base status site. Base said, "We identified a delay in block production due to part of our internal infrastructure requiring a refresh. We've implemented a fix and are seeing widespread recovery and are continuing to monitor the chain for further issues." Matt Williamson, head of research at crypto education platform Collective Shift, highlighted the potential concerns of using Ethereum Layer 2 networks, saying Coinbase's Base chain just had its first major outage, lasting for 43 minutes. Blocks have just started to be produced again. Another reminder that using Ethereum Layer 2s like Arbitrum 1, OP Mainnet, ZK Sync Era, or Base is not the same as using Ethereum Mainnet, which is more battle tested and involves fewer trust assumptions. I'm not saying don't use Layer 2s of course, but just know what you're dealing with. Coinbase has also created a new crypto lending service in the US for institutional clients, helping fill the void left by blowups of firms like Genesis and BlockFi. The platform was quietly revealed in a US Securities and Exchange Commission filing on September 1st, which showed $57 million had already been raised for the program. Clients can lend Coinbase money, predominantly crypto assets, and get collateral exceeding the value of the loan. Such over-collateralization acts as a safeguard from disaster. Coinbase can then turn around and make secured loans to institutional trading clients, similar to the prime brokerage service banks provide in traditional finance. Genesis and BlockFi provided similar lending services in the United States, but suffered massive losses last year that drove them fully or in part to bankruptcy court. The new service differs from the controversial lending program that Coinbase canceled in 2021 that was pitched at retail customers and SEC officials objected. This latest lending service is instead geared towards institutions, which means regulation is less onerous, on the presumption that large investors have the sophistication to handle it. Circle's USDC has launched natively on both the Base and Optimism networks, allowing Circle account holders to send the stablecoin from their accounts to either network. Coinbase has also made USDC transfers to Base available. Circle claimed that it's working with ecosystem partners to develop a system for users to swap old, bridge versions of USDC for the new official versions. Coinbase's Base network launched on August 9th, but Coinbase users could not send their USDC to the Base network from the exchange accounts at launch, nor could Circle account holders. Base users relied on a bridge version of USDC called USDBC to make dollar transactions. On August 29th, Circle announced that a native version of USDC would be made available next week. The announcement states that USDC had also been launched on Optimism, providing a replacement for the USDC.E token that was previously used on the network. Grayscale has told the Securities and Exchange Commission it has no legal reason left to block the conversion of the asset manager's flagship Bitcoin fund to a spot Bitcoin ETF. Yesterday, Grayscale's lawyer sent a letter to the SEC requesting the pair meet to discuss the next steps following the regulator's court loss regarding the conversion of the Grayscale Bitcoin Trust. The letter saying, now that the Court of Appeals has spoken, there is no available rationale that would distinguish a Bitcoin Futures ETF under the legal analysis previously adopted by the Commission in rejecting spot Bitcoin ETFs. Grayscale added it believes the SEC should conclude that there are no grounds for treating the GBTC differently from Bitcoin Futures ETFs, whose filing the Commission has previously approved. On August 29th, a United States appeals court ruled against the SEC's denial of Grayscale's application to convert its GBTC to a spot Bitcoin ETF. Grayscale said if there was any other reason for rejecting the conversion, it would have already been made apparent. Grayscale added its fund conversion application has been pending for nearly 3 times longer than the length of time stipulated by the SEC rules. They concluded the letter by saying, "We believe the trust's nearly 1 million investors deserve this fair playing field as quickly as possible. Crypto whales are always good to watch for potential crypto moves, and we just posted a video about what crypto whales are buying right now, linked down below." Crypto market analytics firm K33 Research said on Tuesday in a report that ETH is poised to outperform Bitcoin in September and October as it benefits from stronger momentum related to a likely ETF listing. The United States Securities and Exchange Commission's final deadline to approve or deny the first Ether ETF is in mid-October, and the chances are high that the agency will greenlight the product. K33 senior analyst Veda Lund explained that the development can potentially boost Ether's price, noting that Bitcoin gained 60% in the first 3 weeks ahead of the launch of its first futures ETF 2 years ago. The odds are stacked in favor of ETH, calling it a strong relative buy versus Bitcoin, adding that the ETH-Bitcoin pair trades at a nearly 2.5-year range low with considerable upside potential. The verdict on a futures-based Ether ETF is slated to be handed down in mid-October, which is reportedly set to get the green light from the SEC. Historically, the SEC has never approved any ETF applications tracking Ethereum futures contracts, though nearly 10 have been filed previously, which include Volatility Shares Ether Strategy ETF, Bitwise, Vanik, Roundhill, ProShares, and Grayscale Ether's future ETF. If the SEC doesn't deny the applications, the Ether ETFs will launch 75 days from the filing date, and Volatility Shares will be the first on October 12th, with others to follow. However, it is important to note that these instruments, unlike spot ETFs, would not involve actual ETH coins if approved. And if it's not approved, investors are worried about Ether's ability to sustain this support level, given the prevailing bearish sentiment in the cryptocurrency space and declining metrics on the Ethereum network. Aside from a handful of unfavorable market conditions, Ethereum's on-chain metrics point to stagnation in demand, both in terms of ETH investments and smart contract transactions. In light of the prevailing bearish sentiment in the cryptocurrency market, which includes exchanges facing legal challenges from the SEC and diminishing interest in cryptocurrencies, as indicated by the latest Google Trends data, the likelihood of Ether's price dipping below the $1,600 support level has increased. All that to say, if the Ether's futures ETF doesn't get approved, we could see a lot more downside. Hedera's HBAR token has surged since the US Federal Reserve's instant payment platform, FedNow, added Drop, a Hedera-based micropayments platform, as a service provider. Drop is a pay-by-bank alternative to credit card payments, which allows merchants to accept small-value purchases digitally without large transaction fees, according to FedNow's press release. Drop allows micropayments in Hedera's HBAR, the US dollar, and Circle's USDC. Hedera Hashgraph describes itself as a uniquely structured blockchain compared to other chains due to its usage of Hashgraph consensus. Hedera is the only public distributed ledger that uses this, according to the company, which notes that Hashgraph achieves 10,000 transactions per second and low latency finality in seconds. Hedera has seen a number of updates over the past few months. Fresh Supply Co., a platform that tokenizes assets across the food supply chain, integrated Hedera into its payments trigger API, which was previously used on the discontinued private MasterCard Provenance blockchain. South Korean bank Shinhan Bank also recently completed a stablecoin remittance proof of concept pilot, which is built on Hedera's open source public network. And most recently, Hedera reached 20 billion transactions. They tweeted saying Hedera 20 billion transactions, 1,738 days for the first 10 billion, 100 days for the next 10 billion. Real world adoption, real world utility. That's it for Altcoin Buzzy's update. I'm your host, Cody Buffington. Thanks for watching.